Welcome back, guys. Cryptofly channel. Today will be educational video about a bull flag and the bear flag. Let's dive in. First of all, guys, I already posted the video about triangles, about the wedges, and the bull and the bear flags. It's one of the many patterns what we can trade and identify on the charts. But let's be honest, like I always told you, all of that patterns, it's totally subjective because on different time frames, different traders can find out on the chart that patterns, someone will not identify that pattern. That's why it's always about your vision of the candles. It's not some magic pill or some rule which playing out 100% all the time. And I would like to show you examples. For all of that patterns, like with the wedges and the triangles, I can recommend you go into indicators and find out that just a standard indicator, bullish flag and the bearish flag. So you will save a lot of time, but you also have to know that TradingView identification of that patterns is also subjective. It's not 100% will be correct all the time. Technically, how it looks like. So we got an impulse, some correction, not so deep like this one. So it's form something like the flag. Impulse, correction, impulse. And let's go to flag should be like this one. So technically it's a flag. One, impulse, flag, correction, impulse. Take profit of that pattern will be exactly the size of that first impulse. So they will be equal like this one. So yes, a little bit longer. So around this point, you can add your take profit line. But once again, the main problem, how to identify the starting point of that impulse. That's a question, and that's why all of that patterns and identification, it's totally subjective. The same story with the bear flag, but it's going down. So technically, it looks like this one. Impulse, flag, and continuation of the trend. So yes, basically, both of that patterns, it's a trend continuation patterns. Also, when you try to identify that patterns, I recommend you to pay attention volume because usually on impulse, we get a bigger volume. And I would like to show you on the chart now. Then in this consolidation, the volume decrease or almost without volume because the people absolutely don't know, are we going down, the correction deeper with a FIB where we can use a 0.5 level by FIB or a 78 level by FIB, or we go into continuation. And on this continuation, at this point, you can open long again, stop loss added under here, under the last candle of that flag. But of course, once again, on different time frames, all of that formation will look absolutely totally different. On that breaking out of that flag, we should see bigger volume again from sales or from buyers. So this is how technically all of that pattern looks like. Take a look. This is Matisse USDT trading pair. Technically, of course, we can say this impulse, we start build something like a flag and we drop it down. Basically correct. But like you can see, we didn't hit the size of that impulse. Here, we should dump even under $1 price. But it won't happen because all analysis we should use in a complex. We can't work just by patterns. We have to work with liquidity pool. We have to work with the volume, trades, and all of that things. That's why if we go to, for example, 4-hour time frame and turn on the volume indicator and turn on the bullish flag, what we can find out and what we can identify with this indicator. When we turn on the 4-hour time frame, like we can see nothing. All right, let's go to 1-hour time frame. Here is what the indicator identify for us. This is an impulse, like bullish flag, and based on this pattern, we should pump to $34 because of size of that impulse. So this is an impulse, and technically, yes, this is a flag, formation of the bullish flag. We should pump to this area, but we dump it. So not all the time that pattern is playing out. Of course, when we zoom out and take a look on history, yes, technically we reached that target. But of course, in the moment, if you open position, here, stop loss under this candle, like 2% stop loss, could fix, yes, 7% profit, but will not reach the target. That's why the solution is always use stop losses. It's 100%, fix profit step by step and add the stop loss at the break even when you're ready in the profit. Got it. If we zoom out, for example, to 12 time frame, here, almost reach it. So we got once again impulse with the volume. So take a look. It was sales ended, and we start to see the volume in Metis. On 12 time frame, 1, 2, 3, impulse and the flag, and like you can see, the volume is almost flat. That's it. And technically, we almost reached the target, because once again, the size of that impulse, it should be here. So technically almost reach it. Let's take a look example of bear flag. Let's go to Ethereum trading pair. I found out here the perfect like from the books example. Take a look. Impulse, flag, we build a flag, and the target. Till penny playing out. Here the size of that impulse, and exactly here. Amazing. If we switch to 4-hour time frame, for example, we can find out. So in August, the indicator showing us the target for Ethereum like 1K300. But basically after 3 months, this pattern not playing out yet. I'm not a fan of patterns, but sometimes it gives you the more information about the potential trades. And also, by end of this video, I would like to show you the hopium for everybody now on Bitcoin chart, daily time frame. Here, since January 24, it was like an impulse. It's formed flag, bullish flag, and the target should be around 106K per Bitcoin based on this indicator. Bullish flag on the daily time frame. If we even switch to 12-hour time frame, the target's still the same, but yes, like 103K. And of course, everything absolute total subjective, because technically, for example, if we go to weekly time frame, maybe we can't know. Maybe this is just a flag. We build a flag like this one, and the side of that bullish flag should be, let me draw again another one, around, if we're breaking out that flag, around 115. Who knows? Maybe it's correct, maybe not. So guys, it's just technical side of that patterns. I highly recommend you go and check the more technical side about the patterns on Investopedia. It's totally free source. I hope you like this video. Subscribe channel, hit the like button, hit the notification button. Don't forget to join my Telegram channel. See you next time, guys.